HiTech Pipes Q1 FY27 Business Update, a positive signal for investors? HiTech Pipes has begun FY27 on a strong note with an impressive operational update that has caught the attention of investors. Before the company announces its quarterly financial results, its sales volume performance already provides an important glimpse into the health of its business. The company reported sales volume of 156,136 metric tons during the first quarter of FY27. This represents a healthy 26% growth compared to 124,027 metric tons reported in the same quarter last year. Even on a sequential basis, the company continued to move higher with volumes rising around 6% over Q4 FY26. Sales increased from 147,127 metric tons in the previous quarter, indicating that demand remained strong despite an already healthy base. Whenever a manufacturing company reports higher sales volumes, investors generally view it as an encouraging sign. It reflects that customers are buying more products and that production capacity is being utilized efficiently. Unlike revenue, which can fluctuate because of changing steel prices, sales volume represents actual physical demand. This makes volume growth one of the most important indicators for companies operating in the steel and manufacturing sector. According to the company, the growth was primarily driven by demand from infrastructure, construction and engineering industries. These sectors continue to remain among the biggest consumers of steel pipes across the country. India's infrastructure development cycle has remained strong over the last few years with increased spending on highways, railways and urban projects. Such investments naturally create higher demand for steel pipes used in construction and industrial applications. Construction activity has also remained healthy across residential, commercial and industrial projects. Every new building, factory or warehouse requires significant quantities of steel products during different stages of development. Engineering companies are another important customer segment for HiTech Pipes. Growth across manufacturing, renewable energy and industrial expansion projects has supported demand from this category as well. The company also credited its diversified product portfolio for the strong performance during the quarter. Having products across multiple applications reduces dependence on any single industry and provides better stability during market fluctuations. Another important factor highlighted by the management is its expanded manufacturing capacity. Capacity expansion allows the company to serve larger customer orders while also supporting long-term growth ambitions. Expanding capacity alone is never enough unless there is sufficient demand to absorb the additional production. The latest operational update indicates that the company is successfully utilizing its investments to increase dispatches. Strong customer relationships also played a meaningful role in delivering higher sales volumes. Long-term industrial customers generally prefer reliable suppliers who consistently deliver quality products on time. Repeat business from existing customers usually improves revenue visibility and strengthens competitive positioning. It also reduces customer acquisition costs while creating opportunities for larger future orders. One encouraging aspect of this update is that growth has been volume-driven rather than purely price-driven. Companies sometimes report higher revenues because of rising commodity prices, but increasing dispatches reflect genuine business expansion. Higher volumes can also improve operating leverage if fixed manufacturing costs are spread across larger production. This has the potential to support profitability provided raw material costs remain under control. However, investors should remember that strong sales volumes do not automatically guarantee higher profits. Steel manufacturers continue to face risks from fluctuations in raw material prices and competitive pricing pressures. The biggest input cost for steel pipe manufacturers is hot-rolled steel coils, whose prices can remain volatile. If raw material costs rise sharply without matching price increases, operating margins may come under pressure. Competition within the steel pipe industry also continues to intensify as several organized players expand capacity. Companies will therefore need to maintain product quality, customer service, and operational efficiency to protect market share. Investors should also monitor capacity utilization in the coming quarters rather than focusing only on installed capacity. High utilization generally indicates efficient operations and better returns on capital invested. Another factor worth tracking is whether this strong operational performance translates into healthy financial results. Revenue growth, operating margins, and net profit will provide a much clearer picture of business performance. Working capital management will also remain an important parameter for investors to watch. Faster collections and efficient inventory management can significantly improve cash generation for manufacturing companies. Management commentary during the upcoming earnings call could provide valuable insights into future demand trends. Investors should closely monitor updates regarding order inflows, pricing, expansion plans, and industry outlook. India's long-term infrastructure story continues to remain one of the strongest investment themes for industrial companies. Government spending on roads, railways, water projects, and urban infrastructure continues to create structural demand. Private sector capital expenditure is also gradually improving across several industries. New manufacturing facilities, logistics parks, and engineering projects could further support demand for steel products over the coming years. If HiTech Pipes continues executing its expansion strategy while maintaining customer relationships and operational efficiency, it could strengthen its competitive position further. A complete investment view should also consider profitability, debt levels, cash flows, return ratios, and future management guidance. Overall, the Q1 FY27 business update reflects a positive beginning to the new financial year for HiTech Pipes. Strong volume growth across both year-on-year and quarter-on-quarter comparisons indicates that business momentum remains healthy.